Hello, everybody. Welcome back to the Trading Room. I'm Shane Vernier, and this is Finding Friday Opportunities. Today, we're going to take all the questions and all the markets that you guys would like to look at. We're also going to take a look at the dollar index. I got really a trend line pointed out to me earlier by an astute trader, a part of the How to Trade community for years now. Really a fantastic bit of analysis. I want to highlight that and really show where we are with the U.S. dollar index. Great Britain pound USD. We had a 920 short yesterday. That thing paid off pretty well, but now we're at a key level with the Great Britain pound USD where we may want to think about either taking profits or potentially entering a long trade. We've got the dollar CAD. We've got a few numbers out of Canada that are sort of peripheral numbers, but the CAD is on the move. So we want to look at the dollar CAD and then the NASDAQ. We've got to look at 25,000 and the NASDAQ. Right now, U.S. stocks are up, and we're really seeing I won't call it a feeding frenzy on risk assets and U.S. stocks because I wouldn't call it a frenzy, but it definitely is sustained bidding at every turn. So stocks are up. The dollar is up a little bit today, but it's getting absolutely destroyed. It looks very, very weak. And then also we've got the energies selling off a bit. The U.S. oil off again today. Natural gas off again today. Natural gas is a bit surprising, but U.S. oil, I've been talking bearish for a long time, and it's very, very important that we understand what bearish crude oil means in the fall months. You don't want to get caught on, say, on the wrong end of on the ledger there when it comes to U.S. oil. Understand what fall seasonality is. It's very, very important that we do so. And if I could get my lighting correct, we'd be in business. All right. So welcome back to the room, everybody. Yes, sir. Good to see you. Yes, sir. Lewis Schofield. Hello, traders. Hello, Lewis. Good to see you. FUT challenges. U.S. oil, please. All right. Deal. That's one of my specialties is U.S. oil. Absolutely. Doesn't take much to get me to talk about U.S. oil, that's for sure. Let me see. Good to see you guys. Gordon Williams, always a pleasure. Happy Friday. Andrea Gorwal, yeah, we're going to take a look at the Aussie CAD right now. We're going to lead off the stream with that. Tuku, always a pleasure. If you guys have any other questions, be sure to throw them in the live chat. I will answer. Today's a great day to really answer any questions that you would like. We've got a few things that we need to go over. We've got to talk BOJ interest rates, take a look at that dollar yen, and maybe the guppy yen, the Great Britain pound yen. If I do forget that, be sure to remind me, because that's important that we talk about the BOJ. And then also the Fed Watch, the CME Fed Watch. We need to look at our expectations for interest rates, and I'm very surprised at what we're seeing pop up for the next meeting. I think the best odds is Jay Powell going to be talking at the next meeting? I think that's a bet that I would be interested in. I'd love to somebody to post odds on that. We saw really a defeated Jerome Powell on Wednesday, completely defeated. I won't say distraught. I don't think that people that rich get distraught, but he was definitely down, and it looked to me like there's going to be a changing of the guard there relatively soon. I don't think he finishes his term. I still say he's out by the end of the year. We'll see. I've only got 2 meetings left to be proven right. We'll see. All right, everybody, Aussie CAD, let's go ahead and start off with that, and then we'll go to U.S. oil. Let's get started with price action. You see right there, we've sort of got a long-term moving average that I had marked from a previous session. Let's go ahead and get rid of that. Monthly chart right here. What's the monthly good for? It's good for really recognizing the macro market state. So going back to really the tariff panic of early April, now we've sort of got the grind, the accumulation. I would say the accumulation of maybe the last 2 months. This is a very tight month that we saw in August, but September's been fairly bullish, and now we're pulling back down to that area of fair value. So just by looking at this monthly chart, do we want to be long or short? Can't really tell much from this monthly, but what we can do is try to build perhaps a sequence where we can see a good, robust support zone. And you can see that support zone is going to be right down in that Fibonacci golden zone, somewhere around 89.58. That's big. 13-month EMA is also down there at 89.82. So this zone right in here, I'm interested in potentially bidding that. It's not that far away. So we're watching closely. I'm a bidder from down here. Am I a bidder right now from 90.62? I don't think so. I think it's really choppy, but if you wanted to take that trade, you probably could. Let's take a look at your analysis and some other time frames. Okay, Andrea, the Aussie CAD is trending lower on the weekly towards the 62% with the 13 EMA and the weekly trend line as downside support. Can you take a look? Absolutely. So let's pull up the weekly time frame here. I love the analysis. I really do, because we're talking about macro market state. We're talking about really big time levels. And what happens with us every single live stream, we wind up in 5-minute charts, 3-minute charts, 1-minute chart. And I'm going, guys, the technicals on a weekly are so much more important than the technicals on a 1-minute chart. Now, I'm not saying you can't trade 1 minute successfully. You just got to know when to do that. We had 3 trades the other day where we were trading very short time frames when Jay Powell was talking, all 3 of them hit. So there's nothing wrong with doing that. Just know when to do it. For me, I love the macros because you just really can identify your levels, identify market state, and then just go to work. So if I'm looking at a weekly, right here, that's our monthly Fibonacci's right there at 90.62. I think that's a decent level. I wouldn't say it's a great level. It doesn't blow me away. That's for darn sure. But what we could be looking at right here is potentially another Fibonacci. Definitely we'll be watching the EMA. That EMA down there at 90 flat, 90 even, absolutely huge. 13-period EMA, 13-week EMA. That's a monster. So have that on your chart, 90.05. Yeah, you want to know where that is. As far as what can we do right this minute, well, it boils down to where are we going to start our Fibonacci retracement sequence. Where are we going to start it at? So if you've got a low right there of 89.52 and a low right there is 89.53, even though this sort of looks like maybe a double bottom, we can't start there. We've got to start with that clear-cut swing low, that spike low, which so right there's the first candle. That's high. This one is the lower extreme. The low is lower than that, the bar 1, and then there's bar 3. Bar 2 has got to be the lowest low. That's the spike. That's the spike formation in a nutshell. So what we've got right there, Fibonacci retracement sequence is going to start right there, and then we're going to take it right up to the top. And what do we have? We have a big-time retracement coming back down into the guts of the last 2 weeks. I would say that 50%, I'm not interested in that at all. 90, 29, somewhere down in there. I like this zone right in here. If I was looking for an area for this market potentially to bottom out at, it would be something like that. 13-week EMA. Now, another beautiful thing here is when next week's trade opens, depending on where we open, but let's say we open right up in here, maybe right down in here, the EMA is going to be right in the vicinity of that 90.29. It's going to be very close, or at least closer than it is right now, unless we get a big sell-off today. So what we're looking at, there's 90.25. 90.25 to 90 flat is robust downside support. So if we back off to our monthly, something like this, interesting. Where's our hot zone? Hot zone's right down in here. What do you got down there? 89.75-ish. That's big for 78%. But take a look at all these support zones that you have in there. I would be looking at 90.29-ish to 90 even. We've got a 50% retracement right there at 90. That zone right in there, let's just go ahead and highlight it. This area right in here, probably a pretty good zone to be a bidder from. Lot in there. We should catch some bids. 90.25 to 90 flat. That's how I'd be looking at this. If you're taking a short, I don't necessarily hate taking a short. Just understand that this market I wouldn't say is necessarily alive. So if we're not trending and we're not on the way directionally to a specific destination, is it a good idea to be shorting? There's an old saying, never sell a dead market. I'm not saying that this one's dead, but if you're short, be careful. What you don't want to do is be short. If you're short from up here, great. You got the money. But if you're short from down in here, there's a lot of technicals in there that could really mess your trade up. So definitely be aware of that one. For sure. Tina, Shane, good to see you. Tina, welcome. Nat Niles, hello, Shane. Good to see you. Good to see you guys. All right, let's get on to U.S. oil. I hope that helps with the Australian dollar, Aussie CAD. U.S. oil. First thing, above all else right now, we're in fall seasonality for U.S. oil. That means that we're already pricing in winter demand for crude oil. That's big because a majority of your consumption there of crude oil and refined fuels in general come from the northern hemisphere. So when we get into the winter months in the northern hemisphere, okay, so what are we talking about there? We're talking November, December, January, February, essentially those 4 months. Now, at least 3 of those months, November, December, January, that's when you start really seeing crude oil prices sort of have bearish pressure on them consistently. The reason why? Not that big demand for travel, refined fuels, gasoline, diesel, things like that. And also your logistics chains slow down. Things like trucking becomes you're still got a ton of trucks running products everywhere, but it does slow down a bit. It's not like it is in the main travel months, especially in those cold weather regions. So what that means is essentially you're not going to see as much gasoline refined out of crude, not going to be as much demanded to get crude out of the ground right now, not as much pressure on supply. What does that mean? It means bearish price action. Now, does that mean, Shane, okay, sell it and we're going to be rich? No, I didn't say that because we could easily chop sideways. You could have a war. Something else could happen. You could see a big spike in the fall. I've seen it before. It's happened. But we're really starting to see the bearish side of the equation step in. August was a negative month of about 7.5%. Typically a negative month. Not always, but it stands to reason going into September and October. That's when you want to start selling. That's when the institutions are like, okay, let's go ahead and hedge our bets for the winter months of WTI crude and also UK crude. U.S. oil, this area right here, Do we want to be a buyer or a seller from 62.52? It's a challenge. Very flat. I could build a case to step up and scalp to the long after all that fundamental analysis I just gave you. I can build a case to step up and buy this thing, but it's got to be perfect entry. And our profit targets have to be conservative at best. What we want to see is a test of, say, 60. Do you want to scalp from 60? Yeah, probably 25 to 50 pips in, out. Get what you're going to get right away, and then just get out. Because once 60 breaks, we can easily make a run at this double bottom. I thought we were going to get it last month. We didn't get it yet. You can see last month's low is right there at 61.45. Right here, this month's low is 61.45. Be very, 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 very careful holding longs down there. Last month's low, I'm going to say this again. The low of last month, 61.45. This month's low, 61.45. That tells us that there's a heck of a lot of guys, or ladies and gentlemen, that are located in and around that area, and they're holding longs. They're holding short-term longs, and that's going to be a premium stop-out point. You'll see what we call a washout underneath last month's low. Price may not just fall away. It may fall away quickly. And if this time of year, if you do get that break, boom, people will start piling on that momentum. Odds are you'll see a run at the yearly lows down there at 55. Really no question in my mind. That looks like it's what's setting up. Now, bigger picture, 19th of September. How much more time do we have in this month? Well, we got quite a bit. We got about, 2 trading weeks? Somewhere in there, trading week and a half. We could easily make that run this month. If we do not, then we're in October, and then we start really saying, well, how low do we go? I love the bearish side of this market. If you want to scalp to the long, go ahead and do it. Right around 60, just don't hang around. You know, you're looking for entries, probably 60.09. Our key level right there is 59.94. If you take that out, I would say my stop loss maximum would be probably 59.71-ish, 73-ish, somewhere in there. So somewhere between a 35 pip risk, maybe a 40 pip risk. Wouldn't go any deeper than that. And I also wouldn't bet the ranch on it, because if in fact you see the big sweep and 60 gets taken out quickly, it may not just go a little ways before rebounding. It may go way down there and test those yearly lows. You've got to understand seasonality if you're going to trade crude oil. But even if you're a technical trader, understand that even though you may really want to take a long, and you may eventually be right, understand the risk that you're assuming. This time of year, people are looking for reasons to sell crude oil. That technical level right there, that's a big reason to sell. Be very careful if you're holding longs right above that zone. Be careful there. As far as going short, where do I want to go short from? Well, I mean, that's going to be the big challenge. I mean, how would you get a real good short entry here aside from just selling the market? I don't recommend that. I would say a great short probably will be beneath last month's low, 61.44. That's almost, I won't say a guaranteed breakout scalp, but you're probably looking at 24 pips, 25 pips easily there. That's going to be a fairly good washout. We've compressed and traded right around that zone for 3 weeks here in September. That could be big. So I would have that definitely lined up and marked on my charts. Understand where that's a vintage look at a key level. We made that key levels trading video a long time ago, but that right there, last month's low, especially after a direct test like that, keep a close eye on that, because when that thing breaks, it could really break. Now, as far as, okay, Shane, you want to be short? Yeah, pretty much. How do I get short? That's a good question. How do you get short? You sell, number one. Number two, where do you sell from? The Fibonacci retracement sequence on this weekly chart is worthless. Why do you say that? Spike high, spike low, spike high, sort of compression. I call that a picket fence. There really is not a firm retracement zone that I would even consider on that. It's flat, it's ugly, it's garbage. But your moving average is a big deal. Your moving average is up there, 13-week EMA at 64.57. Yeah, probably selling 64.25s. Probably a net seller right up in here. Do we get a chance up there again? Maybe, maybe not. I don't think so. One last thing I'm going to say about WTI and U.S. oil. Well, I'll say 2 more things. This right here is a hammer formation. Inverted hammer, excuse me. Doji candle, engulfing pattern. See the engulfer? Trades above and below the tight doji. That shouldn't surprise anybody when you get a doji that tight. You trade both sides of it. Okay, great. Now what do you got? You got an inside bar that's an inverted hammer or a hanging man. Typically, that's going to be a reversal type of a pattern, or a bearish type of a pattern. And now you got the same thing setting up again this month. If you see back-to-back inverted hammers show up like this, I mean, that really is that's prima facie evidence to the bear. You can see what's happening here. So are there any bullish market drivers out there for U.S. oil? U.S. interest rates, rate cuts, all of that jazz. Yeah, those are those are bullish. In my view, that's the only thing that's holding U.S. oil up is just how bad a shape the U.S. dollar is in. That's it. As far as I'm concerned, if you were to see maybe the Fed hold rates steady in the next meeting, look out. I mean, that could really prompt the big crash, and that's really what we're looking at here. Last thing I'm going to look at is this on U.S. oil. I've spent enough time on it. I know we don't have many oil traders in here, but I would be remiss if I didn't sort of break it down for you. This is the chart. You're not going to find this on CNBC or anywhere. I'm proud of this chart. I should have it trademarked because nobody else does it. They don't do their analysis like this. The COVID low of WTI crude oil was what? It wasn't zero. It's about negative $40 a barrel. And that pretty much ended mom and pop drillers in the Bakken oil fields here in the United States. That ruined lives. That also made a lot of institutions a lot of money. If you timed that one right to the short, you're probably not watching this live stream. You're out boating and going fishing. You're doing anything else but working, right? What I would say is this. That's your Fibonacci sequence. There it is. Negative 40. Now, it's not exact. Negative 40, 39. Don't get caught up to the tick. We're talking about a 5-year period here. 38%, 64.81. It is no accident that really has been where the war's been fought for U.S. oil over the past, going back to March of 2023. No question about it. Rebound, nice rally here. And then we come back. We just cannot seem to violate and take that level out. It's happening right now. This level, once it's in the rear view, look out. Do we go to 44.73? Not yet. You're gonna have to see the policies of the Trump administration really take over in the energy department for that to actually happen. But will we see 55? Yeah. Will we see 50? What I like is when you got 55 and 50, split the difference. 52.50 would be my downside target. I think we'll see that this winter, barring World War III or something crazy. So I hope that helps with U.S. oil and also the Aussie CAD. All right, guys, remember, if you want to trade any of these ideas, head on over to Switch Markets and get started. We've got a couple things that we want to go over today with Switch. The webinar, I don't know where it is. It's going to drop relatively soon, though, and I will let you know, and that's on AI and the Algo Builder. Something that we're working on now, probably going to be our next video out. We had a uranium video out last week. This video is going to be coming out next, and it's going to be how to build a currency strength heat map on your MT5. And I talk about what a heat map is, how it can help you trade, and then also how to get our free EA, and then go ahead and download that and integrate that into your MT5 platform. So this currency strength heat map is a pretty good thing. There's all sorts of different features there you can use, different functionalities. Right there, let's say a 15-minute, and we go ahead and we've got our majors up there, and you can see what the heat map is. The green, those pairs are up. The red, those pairs are down. And just by looking at it, you can see which currency is struggling against which. So right there, you've got, say, the Euro CAD in the last 15 minutes. That one's down just a little bit. Looks like the Canadian dollar struggling just a hair to establish any sort of heat or normality against the euro. Interesting stuff, guys. Currency strength heat map. If you're a beginning trader, that may be a great thing that you can use. And if you're a veteran trader, to be honest with you, it's not something that I've used a tremendous amount, but it's not bad. It's interesting. Since I made the video, I sort of have one up now, taking a look at it. It's really easy. So if you want to trade any of this stuff, check out Switch Markets, that's for sure. Let me see. Nat Niles has a question. How do you determine which time frame, monthly, weekly, daily, is more suitable for drawing the Fibonacci across an impulse leg? Essentially, I do it all, Nat. My secret sauce is real simple. Monthly, weekly, daily, I work from long to short. I throw the Fibonacci's on the macro waves on each, you call it an impulse leg, same thing, current wave, macro wave. Throw the Fibonacci's on each one of those waves. I look for intersections. If we have maybe 38% lining up on like a monthly and a daily, or say a weekly and a daily, or let's say we have a monthly 38% that's lining up with a daily 62%, then I know that the fractal geometric nature of price action is present. That means that things are moving in an orderly fashion, and there is a rhyme and there is a reason to the craziness. As soon as I have that, my eyes get really big and I start smiling. Maybe even a little bit of drool, depends on how much money I've got in my account and how much money we might want to make. But that's the key for me, is the intersections, the way that the Fibonacci's fit together. That's why I trade Fibonacci's. It's almost like solving a riddle. You go through and you spot the waves that you need to focus on, and that comes with practice. I've shown probably drawn 100,000 of those at least in the last few years on live streams, but it's kind of an art form, understanding which ranges are important, which impulse legs are important, but you can get very good at it very quickly. It's not rocket science. Let's see. I understand much of it comes from your experience, but to a novice, what's your advice for making it more mechanical and not overthinking it like I am right now? Just work spike to spike, Nat. Just like I showed you the spikes, real simple. Most current spike to spike. We're going to draw one on the dollar index right now. We're going to show a little bit of analysis. So I'd stay as current as possible. Now, I just backed up and showed you that U.S. oil because that is a very, very important period of time. Now, you could draw Fibonacci's according to market structure and our spikes and our impulse legs and all that. You can also draw them according to time period. In my opinion, probably the most significant price that oil has ever traded at in the history of oil trading was negative $40 a barrel. No question about it. Negative $40 a barrel proved that the market was not foolproof, that the market wasn't necessarily efficient, and that anything could happen. Nobody ever thought that a commodity could be worth less than nothing. It was. Why? Because there was nowhere to put it. You can have all the oil in the world. You can have all the oil in the tankers in the world. If there's nowhere to put it, there's nowhere to put it. What do you do then? You got to pay somebody to take it. And boy, some folks made a lot of money on those deals. There was a gentleman out of Canada, a retail trader, just like folks that are watching this live stream. Young man bought 2 contracts at oil at 1 cent. He didn't think they could go negative. They went negative. Broker sent him a bill for $3 million. That's the end. That's the end of your trading career. That's the end of your financial life. You have to go bankrupt. And even when you go bankrupt, the exchange is never going to stop suing you. That's ugly stuff, guys. That's ugly stuff. All right. So if you want to trade and get in there, hey, listen, use stop losses and risk management and use your head. You don't get caught up in that stuff. As far as our trade idea, our trade update on gold, it really hasn't come near our entry point just yet. I'll cover gold towards the end of the stream, but you're looking at about 36.71. We're up 0.75 of a point today. That's not really what I was looking for there. I want to see a deeper pullback and an opportunity potentially to get long gold, but we'll look at that in a second. As far as what we had on tap for a news item, I would say that the BOJ was definitely the headliner today. And the BOJ brought a lot of things to the table. One of which was not really telling us a whole lot about what they've got planned interest rate-wise, but there was a lot of talk about unwinding a bunch of holdings in ETFs. We'll talk about that in a second as well. So that was really the big economic event today was the BOJ, and that happened during the U.S. overnight, so it would have been on the Friday Forex session, even though on most economic calendars it says Thursday. Let me see, Tina, but last Friday oil dropped, even the rate set is going to cut. Yeah, so the big thing about oil and the big thing about all these markets, guys, and I try to talk about this a lot, and I understand, and I've got great questions, and typically that's when when we put the analysis out there, when I put analysis and ideas out there, that's where the rubber hits the road, and it's really always the same question. Well, listen, Shane, the rate cuts, when they said they were going to cut interest rates, that should have sent oil up, but it went down. And I said, yeah, okay. Shane, the NFP came in less than expected. That should have sent the dollar down, but it sent it up. Yeah. Short-term price behavior has very little correlation with what the actual numbers say. Now, we can talk a lot about why that is. I could put on my little tinfoil hat and be a conspiracy guy and say we're pretty much the last ones to get the data. The smart money already knows. We could say that. What I always say is this. In and around a big-time economic release, like an interest rate decision, give the market time to digest it. Now, we can get in there and scalp like we did, just technically scalp. After Jay Powell, we took 3 trades. We could do that. Technical 920s, things like that. We can do the technical trading when there's volatility there. I'm not concerned about that at all. But when we start saying, okay, you're saying that we got the rate cut that should have sent oil up, but it's still down. It's coming down, down, down. I'd say, well, is oil coming down, or is it kind of stagnating and staying put? We looked at those charts. We've got back-to-back inverted hammers setting up on the monthly. That tells me that those interest rate cuts are the only thing keeping a bottom in this market. So unfortunately, it's not as easy as just showing up and saying, okay, Jay Powell cut interest rates, so we're going to go ahead and buy oil. It's not that easy because the market already pretty much knew that they were going to cut interest rates, and that move had been priced in for a while. But we want to see our key numbers. We understand that right now, bearish sentiment towards crude oil. What's the only thing really? Now, there's a couple things holding up, but what's the problem? Why haven't we seen the big sell-off to 55 yet? Why? Interest rates and a weak dollar look to put maybe a temporary floor in at 60. But I think that breakout is really right. But it's a great question, Tina. Great question. Let me see. So was gold, wasn't it? Yeah, I mean, when we saw rate cuts, we would see gold rise, and we are seeing gold rally. So the idea there is, with as far as gold goes, a lot going on with gold as well. Institutional really starting to stockpile physical gold. But what you see with gold is rate cuts mean what? It means that the Fed and all the banks are going to try to get more money into the system. More money. Where's my money at here? I have my dollars. I don't have any dollars. Oh, yeah, I do. Okay. Still got euros from Europe. Believe that? 40 euros. I don't know what I'm going to do with that in Montana. But, okay, so we got all this money, right? We got all this cash. So we're sitting here, we're saying, okay, if there's this much normally coming out per month, normal interest rates, this much money, the government, all the banks are happy putting into the system, okay? So now we have that on the table. Well, then we start cutting interest rates, and the government and the banks saying, okay, we want to put all of this in there as well to grow, to get the economy to grow, right? To boost employment and get expansion going. Well, that's great, but look at all the money we have in the system now. Look at all of it. It's not worth as much as it was when there was only this much in the system. So the idea is that as soon as that money gets devalued, what happens to a commodity? If this is a barrel of oil, it's going to take more of this to buy this, right? So when we see interest rate cuts and a devaluation of the dollar, what do? Immediately commodities go up. Now, crude oil is a different animal. We're bearish. We're going into fall seasonality, right? So we're bearish there. Supposedly, we're supposed to be producing more oil. I don't see it. But we've still got some bearish market drivers there. In my opinion, you're seeing that rate cut in the weaker dollar is propping up crude oil. And as far as gold goes, people say, well, I'm going to hold gold over dollars. No question about it. That's essentially all it is. So the idea is that, yeah, you're going to put more money in the system. It's going to become worth less. And when it's worth less, things like, crude oil, well, probably going to cost us a little bit more than it should. Gold, it's going to cost us more to get gold. Silver's up again today. Houses, how about housing? How about food? Has anybody bought a steak in the United States lately? Holy cow. It's absolutely ridiculous. So that's just sort of a quick look at the idea there, Tina. So I hope that helps. Andy Tong, hi, Shane. How was your vacation? Sorry, late for the party. It was good. Like I said, I got 40 euros left. So I didn't lose the farm. I still got 40 euro. I actually found it to be pretty inexpensive down in Greece where we were. I was surprised. All right, so week 38 right here, BOJ interest rate decision. We definitely need to talk BOJ. So what happened? The BOJ held everything rates steady at 0.5%. 0.5%, sort of a fascinating look at a bank that wants to cut interest rates. They just can't really figure out a way to do it responsibly without spiking, or I guess crushing the yen. They like the yen where it's at, but they'd like it a little bit weaker, I think. So how are they going to weaken the yen? I know we're just sort of getting out there talking about policy moves, but how would you weaken it? Bank of Japan keeps interest rates steady, decides to start selling ETFs. Unveils plan to unwind $250 billion worth of ETFs. What does that mean? It's on their balance sheet. It means that the Bank of Japan is going to start reducing their holdings, their assets. Okay, so instead of holding back all those ETFs and everything that they've acquired to sort of make themselves, I wouldn't say whole, but to establish their position within the economy as being a solid one, instead of holding all those yen, they decided to hold a bunch of ETFs. Okay, that's great. So when they start unwinding those assets, selling those assets back to the market, what are they essentially doing? Anybody? Well, they're dictating what the yen's worth. Think about it. You're going to sell all those ETFs back into the system, right? You've got them here. You're going to sell them in there. What are you taking for payment? You're taking yen back. You're trying to balance your books. Theoretically, that will strengthen the Japanese yen. What will it do to, say, the Nikkei? Not so good. Not so good. We saw a sell-off in the Nikkei. So the idea here is that when you sell all these ETFs, you're taking yen out of the system. So instead of just cutting interest rates or whatever and trying to inject capital in, it was a relatively hawkish meeting from the Bank of Japan. So what happened today for the dollar yen? Not a whole lot. The yen's been very, very stagnant, I would say. Take a look at our Bollinger Bands that we have here. We talked a lot about these things when they get parallel. Sometimes you just sell the top and buy the bottom. That's exactly what we're seeing today. Had a little bit of a sell-off here, had a little bit of a rally, and now we've got a doji. So nobody really knows what to make of the Japanese yen at this point. It looks to me like there's fixing to be a breakout at some juncture. You're testing the top, you're testing the bottom. You're waiting for that really big commit one way or the other. Look at those Bollinger Bands shrink way down. This is a really, really tough market to trade right now. So if you're trading the dollar yen, yeah, we had that 5-minute trade that went okay the other day, but I mean, really, if we're looking at longer time frames, this is really difficult. I mean, this is an absolute train wreck. So let's go to a weekly. It just doesn't get any uglier than that. I mean, take a good look at this. Hammer, inverted hammer. I would call that a doji. That's good enough for me. Doji, hammer, or inverted hammer, inverted hammer, inverted hammer, hammer, hammer. What happens? I mean, clearly we're going to break. No question about it. Is it to the long or to the short? I have no idea. And this is a function of the U.S. dollar not really doing much of anything. And then also the Japanese yen. I mean, $250 billion worth of assets. They're going to sell, and they're going to take the money, and they're going to go home. The Bank of Japan is going to take the money out of the market and go home. Interesting. Is it hawkish? It's pretty hawkish. That's a pretty hawkish stance from the BOJ. Folks that traditionally love to work with a negative deposit rate. Now you're at a half point positive. Not very good. Great Britain pound, Japanese yen. You can see the big reversal here. This developed this week. There's a potential here where we may be able to spot a trade, but it's got to be on a longer time frame. So let's step back to a monthly. Okay, monthly is interesting. It's really tough. This is difficult right there. So last month's low, sort of a hammer. Now we rallied, and now we're just sort of stagnating right around that area of fair value, right around 199, 198.75. Very difficult. We want to break out. The market wants to break out. I mean, 200 has just been the Achilles heel of this pair. 200 even has been really just brutal on everybody involved. I mean, you can't get any legs above 200, and even selling 200 has been a challenge just to get good entries. So what do you have? The spike high right there wiped out a lot of shorts, and now where are you back down beneath 200? Man, this is tough. I have to tell you, I think that if I was trading this, I would either do it on real short time frames or I wouldn't do it at all. This right here, interesting. I'll draw a Fibonacci sequence here on this 4-hour chart. There's your spike highs from back on the 17th of September. You're going to start right there. That would be your high. And then right there, the last 4 hours would be your low. You can see that's pretty much your spike high there. There's your low. Pull back, sell from 200. I'll buy it. I'll pay it. I'll ante up. Let's trade it. Why not? That's not a bad trade, really. You'd be looking at 199, probably 199.94s. Something like that. Set up shop. Look to sell that right in front of 38 and then play that to the downside maybe for 25 pips. I wouldn't go much past 25. Stop loss right up here above 50%. I like that. 220, let's see, 200 and a quarter basically. Put it up at like 227. That could build your short trade. I like that. But it's got to rally first. You've got to see a rally from current levels. And right now the market's a bit heavy. Challenging for yen traders. Absolutely challenging for yen. The reason why? Monetary policy. That's a fairly hawkish stance out of the Bank of Japan. And those folks are the doves of the world typically. They love to see a weaker yen to get the export sector going and draw the foreign investiture. Times are changing, guys. Times are changing. That's for sure. Let me see, Tina. Why did gold drop during Jay Powell's live speech? Well, it's just a flood of action, Tina. Remember, going into the speech, we knew there was a 97% chance of a 25 basis point rate cut. Now, why did gold, in fact, sell off? And it did. We had the 5-minute sell there on the 920 crossover. Why did it sell off? I won't even venture a guess. I think some of it had to do with, maybe there was some hesitance towards Jay Powell actually cutting interest rates as he leaves. But as far as the intraday price action, I would say it's just intraday price action. I'd chalk it up to noise. I really would. I want to see it drop to our other level so we can get our trade ID involved. Let me see, Maldros. How you doing, buddy? I'm doing pretty good. I feel good. Getting ready for the weekend here. I need a little bit more rest, recharge the batteries after the long plane ride, but it should be pretty good. Yes, sir. I've been surviving on the 920 with RSI and 30-minute charts with the yen. I tell you what, that's some tough living there. That's some tough living. Trading them daily ranges is nice. If you're range trading the yen, but like let's say you're trading the daily on the dollar yen. you're in fantastic shape. I mean, this is beautiful stuff. I mean, one of the things that I like to do, I won't really get into, turn my highlighter off. I won't get into exactly the secret sauce behind my formulas and whatnot. I won't do that because I'll probably get sued. But one of the things that I like to do is I like to take a look at sort of an average range over a certain period of time and apply that to really early session trading and just try to decide what exactly a daily range is going to look like. So like, let's say I came into today with a range oscillator that was an average of, say, a few of these bars back here. Then I could basically project how far the market is supposed to move in a given session. When you get into markets like this that are ranging, you can nail them. When they're not trending, basically all you're doing is figuring out where to sell a high and where to buy a low, and you're in great shape. It's a lot of fun. It's called reversion to the mean trading. I prefer that to trend trading, to be honest with you, but it can be a lot of fun. That's for sure. All right, everybody, let's see. What else do we have to do today? I wanted to take a look at the dollar index. This was really some pretty good analysis that was pointed out to me earlier today by a veteran trader of the room, the How to Trade community. Basically, the idea was, hey, listen, Shane, we've got a monthly trend line that's in play for the dollar index. And I took a look at it and I went, you're right. COVID lows shows us exactly where we're at according to that long-term trend line. So right down there, the financial crisis of 2008 to 12, really some ugly stuff that was going on in April of 2011. COVID craziness right here, sort of the COVID panic, and then the big sell-off when we went to unlimited quantitative easing. That's before the U.S. dollar started tightening a little bit. But this right in here, take a look at what you had. That's a strong hit. So if this is your touch point, there's touch point 1, touch point 2, touch point 3. We're deciding right now what's going to happen to the U.S. dollar on a macro scale. What I would say is this downside, this level right here, this line somewhere between, I'd say 95 and 97, absolutely huge for the U.S. dollar. If you see this line taken out to the downside, I would say my next target's going to be somewhere on the COVID lows, the post-COVID lows, down around 90. I would say 92 or 90 will definitely come into play. No question about it. And the reason why is you're compressed. If you break and we get a monthly close down there, we could really fall away quickly. And think about what's coming our way. That's going to line up with more rate cuts, a turnover at the Federal Reserve, a new Fed chairman, and potentially 3 or 4 new FOMC members. That's absolutely huge. That's going to set the stage for a rate cut cycle that the administration really wants and champions. I don't know. I can see the downside for the U.S. dollar as being tremendous. I can't build a case really for the upside. What's going to strengthen the U.S. dollar? Not much. Not much. So if I was trading this, I would definitely be watching that trend line right there. That's a big deal. As far as do I want to buy or sell, I want to sell it at any chance I get. Spike high right there coming right off of that trend line. If we got to pull back to like 101.50, you got the 13-month EMA right there. I mean, that trade makes itself. I just don't see us rallying that high. So definitely be careful. Be careful if you're holding longs in the dollar index. Be aware of that. It's not a bad trade. If you bought that lower trend line, it's not a bad trade at all. But you got to be careful. Just like we pointed out in that U.S. oil contract, if you see that breakout, don't wait around. Just pull the money off the board, sit back, watch the show, and then get ready. I mean, you could see where the where the institutions and where money traders are going to be interested in snatching up dollars. I'm not a big smart money concept trader, and the order blocks to me are suspect, but the way this post-COVID low, this was essentially a reset of the financial world. This post-COVID low down here, you get some bids down there. You'll get some bids down there. So good stuff right there. I'm watching closely. I would love to be a bidder from down there in the dollar. If I was going to call a bottom, attempt to call a bottom, I would probably call 89. And then I'd say we start heading north for the next several years. Just my opinion, though. I could be wrong. A couple other things to go over before we sign off. Great Britain Pound USD. This is a fantastic trade. This was our 4-hour sell. 920 EMA crossover. The 9 crosses under the 20. And what did you have right there? You had a great big sell signal. You also, right up on that spike high, you were in overbought territory. So you're sort of looking to sell. But this sell right here, you don't need an RSI to trade a 4-hour chart. And then right there, the market just sort of fell away on that Great Britain Pound USD. So we can go ahead and rack them and take the money off of the table there. But I would be very interested in what happens at this current level that we're now at. Now you can see we're sort of pulling back. We've got a big negative week going of about 0.75%. Let's go to a monthly chart. Nice pullback there. I'd say we potentially could be on the verge of a bid. Let's go to a daily. Just got to let this thing develop a little bit. But what I would say is potentially on this daily, you can see we've got a crossover brewing. You might have a daily sell come our way. Let's go to the weekly. Where do we want to buy if we're going to buy? $134.83. That's pretty much where we're trading right now. 62% of that 3-week range. I don't know. Do you want the accumulation trade from there? Maybe. We tried one yesterday in the Euro USD. Didn't really work out too well. It was a short-term trade, low risk. But do you want to bid this right now on the Great Britain Pound USD? Potentially. I mean, it's an idea. Is it a good idea? I don't know. The heat's on. Heat's on the market. I was happy with that 920. I probably would sit this one out as opposed to diving in and being aggressive here on the cable. I would sit this one out just because I don't particularly want to go against that daily. If you see the 920 daily setup, that's typically a pretty good signal that we're going to move. You can see right there was the daily buy. Right there was a real flat market sell. That was a loser. There was the buy. Got a pretty good rally there. This one could move. That's for sure. CME Fed Watch, let's take a look at our interest rate expectations. This has become more and more important as we drive deeper into the year. 40 days, 17 minutes. We'll have FOMC live for you again. 91.9% chance that we cut a gain. So 33.75 to 4. We believe that that's pretty much a foregone conclusion at this point. And then after that, we go to December. We're looking for another rate cut. So we're looking for 2 more rate cuts this year. Let's do something like this, though. What are they pricing December of next year in 2026? Where do they think that interest rates are going to be? Now, that's just a basic bell curve. I mean, that's just when you see a bell curve, it means we don't know anything but 2.75. So I would say we're an odds-on favorite to be under 3%. This is what the Trump administration wants. Can we take it out any further? All right, let's go to October of 2027. All right, we could not load it, so they don't have it up yet. All right, 28th or July 28th for 2027. So we're thinking that the prime rate's going to stagnate somewhere around 3%. That won't be low enough for Trump. They wanted it too. They want it very, very low, very low. So I think that's interesting right there. Good stuff. We're going into a dovish cycle, guys. You probably are, best served to be long stocks and short the dollar. What does that do to commodities? Tough to build a bearish case for gold. Really tough. So the key takeaways from this stream are we're really a break point for the U.S. dollar. The U.S. dollar could really move lower if that trend line goes. Look out. Thank you for pointing that out to me. You know who you are out there, but fantastic analysis. And that was something that I missed. I was watching the DXY and I was thinking, yeah, wow, it is a trend line. And we're working on the third touch. So, yeah, that's fantastic. All right, guys, I'm going to go ahead and sign off for today. This was sort of a weird week. I was sort of in and around, and we got in late and tried to do the best we could with a few live streams. But I'll have a new schedule up for next week, and we'll be locked and loaded and ready to go starting Monday through Friday. We'll probably have a couple of workshops next week, a couple of strategy workshops, and maybe some other things. But as far as the markets go right now, I'm looking at them. I'm not really blown away by anything I see. Bearish in crude oil, that's sort of the stance I've had for a while now. Bearish there. As far as stocks, you're probably going to want the long side of those stocks. The U.S. dollar, we've got a bit of a rally going. We'll see if it holds. All right, everybody, have a fantastic trading day. If you have any questions, head on over to How to Trade. Send me a private message. I'll be sure to get back to you. Have a great weekend, and we'll see you back here Monday. Trade the action well, and we'll talk soon. See you.